What's going on, guys? Welcome to our weekly Outlook webinar for this week, April 8th through the 13th, 2018. Thank you guys for joining me today in this pre-recorded format. I'm currently traveling back to the United States from Australia. If you guys don't know, I've been in Australia for the past 5 months, doing a little bit of traveling, living out here temporarily, checking it out, but I am finally headed back to the United States and hopping on a plane in just a few hours here. So that is why this is a pre-recorded version. But let's just jump right into things, guys. I want to give you guys my bias and my outlook for this week. Before we jump into things, I do just want to make a disclaimer saying that this is just my opinions, my bias, my view of this week in the markets. Please don't be just using my bias or my outlook to take your trades. Don't trade money that you aren't willing to lose. Understand the risks before investing in Forex. But I first want to look at the economic calendar before we jump into the technicals. Nothing too specific to point out this week. There are a couple notable central bank members or heads speaking this week. We have Governor Lowe of the Reserve Bank of Australia speaking. We have European Central Bank President Mario Draghi speaking a little bit later this week. We also have Governor Kuroda from the Bank of Japan. We have Bank of England, Governor Carney speaking. So lots of people speaking this week. No other real key risk events. We have some CPI for the dollar a little bit later this week, some PPI for the dollar a little bit later this week. If you guys are in the premium group, we'll go over the economic calendar day by day on our daily live webinars for you guys that we do 4 times a week. Other than that, let's go ahead and jump right into the technicals, give you guys my bias. Not all of these pairs to the right do I have a bias. Some of these pairs are actually going to be skipping. Others I actually do have a idea of where they're going this week. But starting off with the dollar index, I'll let you know my general bias is I am overall expecting dollar weakness. Right now, we are consolidating around the yearly lows. We've actually been consolidating around the yearly lows for quite a while. Not just this year's lows, but we actually broke last year's lows as well, and we've been consolidating lower. Actually, if you look at the dollar index on the weekly, you can actually see since the end of 2016, early 2017, we've been in a pretty significant sell-off on the dollar. We've seen the US dollar weaken over the past 16, 18 months or so. And I am expecting throughout this year that overall trend of the US dollar weakening to continue. Most notably, I think if we remove everything and just look at raw pure price action on the weekly time frame for the dollar index, we can see that the past couple weeks we've been in a very tight consolidative range for the dollar index. We have a very nice bear flag going on right now, lots of consolidation. We really haven't made a correction since the last big dip that we made. We've really just been consolidating sideways, and this hints to me definitely selling pressure, definitely weakness in the dollar still, seeing that we haven't made a correction after almost 8 weeks. I'd expect this dip to continue further over the coming months. This week, what is my opinion on the dollar index? I think we could continue to see some consolidation around this 90.50. If you can't tell, with the exception of a few days last week down here where we broke out of, which ended up being a fake out, for the past few weeks, we've been consolidating in actually a very tight range for the dollar index, which I just outlined with this box. I'd probably expect the consolidation to continue in this area. However, my overall bias is to the downside over the coming weeks and coming months. So if that's my bias with the dollar index, obviously gold is very similar to the opposite of that. Gold, if you guys, I haven't done a weekly Outlook webinar on the past 2 or 3 weeks after doing them consistently for about a year now. I've been enjoying my last couple weeks out here in Australia. Been pretty busy out here, wrapping up my last couple weeks. So I apologize for that, but I am back on the weekly Outlook webinar grind, hence this webinar you guys are watching right now. But for those of you that are in the premium group, you guys know that we had talked about 1350 being a target for us back when price was around this area. A few weeks ago, we saw that area hit, and the past week has been very volatile for gold. We've gone over that in a couple of the daily webinars for you premium members as well. But my overall bias with gold is bullish, right? If I'm overall expecting the dollar to weaken, it would only make sense for me to expect my outlook for gold to be bullish as well. Now, similarly to the dollar index, I think we could continue to consolidate. So gold could maybe stretch all the way back down to the 1320 area, maybe consolidate around this area. But ultimately, I think it's going to go back up to the 1350 area, retest that area, and then ultimately go up higher. Euro USD, same exact opposite analysis as the dollar index. So as I mentioned, the dollar index, we may consolidate where it's at right now, but ultimately go lower. So Euro USD, I think it could consolidate around where it is right now, but ultimately go higher. So if we remove all of the charts and trend lines and support and resistance and just have a completely naked chart, and you look at the weekly time frame of the dollar in or Euro USD, you can see it's literally the exact opposite of the dollar index, right? We have the two complete exact opposite of each other. And Euro USD, very similarly to the exact opposite of the dollar index, the dip on the dollar index, which is this rise here on Euro USD. We've just seen a consolidation sideways ever since that rise on this pair. And I think the overall momentum is still higher. We can see that if I do bring in my trend lines and my support and resistance, we can see that we do have this trend line on the daily where price actually bounced off of on Friday, which is this previous daily candle, this blue daily candle, which just very quickly, not to backtrack or get too distracting, I just want to recap Friday's NFP that we saw come out. So just going back to the calendar very quickly, on Friday we had non-farm payrolls come out and they actually missed. They were much lower than the expectation. We actually saw unemployment rates rise by 0.1%. So no surprise that based on those results on Friday, if we can drop it down to the hourly just very quickly, we can see that this move actually right here, these two hourly candles are the hourly candles following NFP, and we saw that weakness going into the end of the week, or weakness in the dollar going into the end of the week. And obviously the catalyst to that was that weak NFP report. Now, let me make something clear that just because NFP was weak, that's not the reason why I'm looking at selling the dollar. Obviously, that helps out a little bit, but for those of you guys that have been following along with my daily webinars, if you're a premium member, and even I know I haven't done a weekly webinar in a couple of weeks, but it's only been 2 weeks. And before those 2 weeks, if you were watching my weekly webinars consistently as I was doing them, I've been talking about this year's expecting the dollar index to still move lower. So NFP is just a cherry on top, if you will. So USD Swiss franc, very similar to Euro USD. I think it could consolidate around the area where it's at, but ultimately I'm expecting it to go lower with a weaker US dollar. I'm just going to keep it as simple as that. Pound dollar, I'm actually not really interested in trading. I just want to reflect back on one setup from last week. There was this really nice 4-hour channel that was created last week. And then towards the end of last week, we actually broke out of this channel, had a nice sell-off. And then very quickly, actually, that reversed and we went back into like this range area that we've been playing in. So not really interested in trading this pair. And I'm actually not really interested in trading pound yen either. Neither pound pairs I'm really interested in trading. I don't know why those orange channels were there. That was weird. But I think pound yen, it's pretty cut and dry what's happening right now. Just a couple key levels that I would just have your eyes on is definitely the 148 level. We've been talking about this level for quite a while. I mean, it's a pretty simple level why it's so important, and we're currently trading just above the 148 area. It's also, of course, a psychological area, being that it's an even number, but it's also been a technical level of support and resistance in the past. But we're just consolidating upwards. We're rising. We are in a very small uptrend. We are making a very strong correction after the previous dip. Do I think this pair could go lower? Absolutely, especially if we see the dollar, the US dollar continue to fall. That should put some pressure on, some buying pressure on the yen, which overall should pull this pair down is what I would like to see. Dollar yen, I would like to see this pair move lower as well. Of course, if I'm expecting dollar weakness and I'm expecting Euro USD strength and just the whole bias across the board is US dollar weakness overall, medium term, long term, I would expect dollar yen to continue to fall as well. Now, pretty interesting spot for dollar yen. We are below a pretty significant level, right? We had actually been in a range for over a year with dollar yen, and we had broken out of that some weeks back, and we've just kind of been consolidating, playing underneath this level. Now we're headed up towards the support of the previous support of this range. So we're going to see it most likely act as resistance. We can see it nicely on the daily here. So here is that range that we consolidated in for about a year, broke out of a couple weeks back, and then consolidating a little bit lower. And now we're going up to make a retest. Looks like we're coming back up to test about the 108 area, and then we'll look to see what happens. But overall, I would like to be looking for long-term sells on dollar yen. AUDUSD, I'll just very quickly put this out there, guys. This is something you don't want to miss. And my accuracy with this pair has been pretty on point. If you had been following along with the weekly webinars, there is a move that you guys could have caught on AUDUSD that I gave away for free on these outlooks. And then, of course, a little bit more in depth on the daily live webinars. But some of you guys may see it. I've talked about this almost on a daily basis when we analyze this pair in the premium group. So I might sound like a broken record to some of you guys, but you guys notice we had this extension up higher. Now, this is back in 2017. This was like middle of 2017. And then towards late 2017, we actually broke this major uptrend that we were in, and we made a very, very strong correction to the downside, bounced off of this trend line right here. So if I clear everything, we can see that we have a bounce, and then here's that third bounce right here where we bounce off. Now, if you guys were on my weekly webinars when price was up around this area, I told you guys all around when price was in this black circle right here that this uptrend, that we didn't know when this uptrend was going to break, but if and when this uptrend broke, that we were probably going to expect a major correction to the downside, just like we saw in the past. So sure enough, hindsight is always 2020. We are able to see that we did get that very strong correction. A little bit tricky to trade at times, I think. We had a bounce. You can see this bounce right here. So we had a nice bounce off of this major previous supply area for AUDUSD. So we weren't sure if it was going to bounce off of that area, if it wasn't going to make that deep correction like we wanted to. Sure enough, it is moving lower to our deep correction. And I'll basically just get to the point of me recapping all of this is now I am expecting a buy on AUDUSD. Not quite yet. I think that there could be a little bit of downside, but somewhere once it gets around this trend line. It's definitely getting closer to this trend line, but once we get to this trend line, I'll be looking at taking a buy position on AUDUSD. This will be a swing trade. I'll be looking at buying probably somewhere around this area once it hits our trend line. And then I'll be looking at taking profit somewhere around the 8 area. I think ultimately it's going to go much higher than the 0.8, but 0.80 is a very psychological level for AUDUSD. And, going from around the 76 range to from the 0.76 range to the 0.80 range, that's 400 pips. So that's a nice, solid swing trade. And my stop loss is going to be probably somewhere around the lines of about 100, 150 pips. So of course, good 1 to 2 risk to reward. At least I like to get a little bit better than a 1 to 2 risk to reward on a swing trade. But yeah, just some nuggets here for you guys. I always say if you have a trading journal, I mean, you should definitely have a trading journal, but if you have a little section in your trading journal where you write down, maybe you have a section for swing trades or upcoming swing trades, that I would have something there. And I'm actually going to, I didn't know you could actually do this. There is actually the option to be alerted. I know you can set alerts with TradingView, but I was not aware that you could set, I should have known that you can set an alert on a trend line. So this is nice. I actually have an alert now that once this trend line is touched, I'll get a text. So I'll be able to monitor price action. I'm sure with the amount though that I look at the charts, I'll see it anyways. But that's that anyways. With NZD/USD, if and when we do see that big up move on AUDUSD, we're probably going to see a big up move on NZD/USD as well, as they tend to have a pretty positive correlation to each other. Now, NZD/USD hasn't been as clean, right? We haven't seen a deep correction to the downside like we did in the past on NZD/USD currently. Like we see on AUDUSD, we're really seeing just a lot of consolidation on this pair sideways. So not super interested in trading this pair. We have a major bottom, major demand level around the 72 area for this pair right now. And then we have an even bigger supply area on the weekly time frame that you can see just above price, right around, I'd say the median for that zone is around the 73.30 area. So we're in a range with NZD/USD. I'm not really interested in trading this pair right now. I'd be more interested in AUDUSD. But let's finish it up, guys, with USD/CAD. I've been telling you guys for a while that I've been expecting some downside on USD/CAD. For those of you guys that are in the premium group and you keep up with my daily live webinars that I do 4 times a week for you guys, when price did break out of this resistance a few weeks back, I called this being a fake out. Sure enough, it was a fake out. We saw it very quickly run back down to this range. And ever since we saw this consolidation in this area, I've been expecting some downside. We're getting that downside. My yearly targets, or my long-term yearly targets for USD/CAD, is still much lower. I'm still expecting some major downside for this pair. We'll still see what happens. But yeah, my opinion on USD/CAD is still biased to the downside. So overall, guys, I want to let this week kind of start to play out. It's definitely been a slow start to the week. The markets have been open for almost 12 hours now, almost 12 hours now. Haven't really seen a whole lot of movement. Like I said, really main focus is watch the dollar index. If you don't know by now, it's not really like, I wouldn't really say a secret or anything, but because I go over it so much, but just telling you straight up, just one of the biggest tips and hints that I personally, have in my repertoire, my trading repertoire, is looking at the dollar index, waiting for confirmation on this pair, using this to obviously correlate between Euro USD, and then using that correlation to correlate between other pairs. So the dollar index is something that it's one of the very first, it's probably the very first thing that I look at every single time I open up my charts. And as of right now, it looks like it could be consolidating a little bit. So like I said, I wouldn't be surprised if this week was maybe a little bit on the slower side consolidating, but I'll still try to find that's not necessarily a bad thing. I think that could give us some intraday trading opportunities if we're ranging, but we'll look to see what happens. But that's my weekly outlook, guys, for this week. So again, do your own trading, take your own trades. Only use my bias, what you guys hear here, as a crutch or handicap to what you guys are doing. And at the end of the day, remember, guys, that it is not about how many trades you win. It's not even about the accuracy of your trades. It's about the quality of your trades. It's about the risk to reward. Before you enter a trade, ask yourself, have a little checklist. Do you have a 1 to 2, at least a minimum of a 1 to 2 risk to reward, right? If you're risking, let's say 20 pips, are you looking for your take profit to be at least 40 pips, right? You don't want to be risking 20 pips to make 5 pips. That's a terrible risk to reward. You're going to have a nearly 100% accuracy, or a very, very high win rate for you to be successful long term. If you focus more on your risk to reward and less on the number of trades that you win, then it's a law of averages, right? It's a numbers game. You let the odds work in your favor when you use good risk to reward. And then, of course, you have to follow that up with good risk management as always. So that's my weekly outlook, guys. For those of you guys that are premium members, I'll see you guys tomorrow on our daily live webinar as usual. If you are a free member, I thank you guys. Even if you're a premium member also, I thank you guys for supporting us, Positive Traders. We've been going for 2 years now. we're getting back into things. Obviously, the past couple of weeks have been a little bit slow. Haven't done a weekly webinar the past 2 weeks, but I am happy to get back into things. I'm happy to get back home finally after I've been in Australia for almost 5 months, but before that I was actually doing a little bit of traveling around the US. So it's actually been over 6 months since I've been home settled and just in a normal routine. So pretty much been living out of a suitcase traveling the past 6 months. So I'm very excited to get back into a routine, and especially for you premium members, just keep the momentum going and keeping the activity and the energy going inside of our premium group for you guys. But other than that, I will stop yapping and let you guys get on with your week. If you guys have any questions, feel free to reach out to me on social media. If you have recently messaged me and I have not replied, please shoot me another message. My inboxes have been completely full, but I'm going to find some time probably on this plane ride, as long as it has some internet, to get back to everybody's messages. Other than that, guys, have a safe trading week. I'll catch you guys on next week's Outlook. Take care, guys.